founders and investors put capital into a project. They work for years to make that project, and their financial gains are tied to whether or not that thing they built has some degree of success. It either goes public with all the disclosures that are normally associated with going public, or they get bought by another company, by professionals. And what we've seen in the crypto space is after some fairly short.
The crypto industry is now wondering who is watching us. The best part is that it's free to subscribe, which means you will receive all new information for free. Don't just follow the trends, stay ahead of them. Robert Kiyosaki, author of the best-selling book Rich Dad Poor Dad, wants to take this opportunity to thank everyone who has trusted us and read our comments. Enjoy the new edge in this video and sign up with Bitcoin Zella now. Lyn Alden examines Trump's policies in depth. The effect of inflation on the economy. Let's gather your thoughts and discover the backstory of these important subjects. MicroStrategies, daring maneuvers, and Bitcoin's changing function.
Lockup, a lot of the early people, the insiders, can get out wealthy, regardless of whether or not that project has any long-term success, and the vast majority don't. Meme coin just kind of cut to the chase. I mean, if there's one good thing that can be said is they're just kind of transparent about that there's no product or service. But it's kind of the nihilistic later stage narrative after the prior narratives were exhausted. As for Trump launching one, yeah, that was surprising. And of course, the scale is relevant because, meme coins are not a very strong narrative for a cycle. But I guess if you have a sitting president doing it, it adds fuel to that narrative for a period of time. It's actually kind of in line. They did Trump Stakes. He's had like Trump Vodka, Trump University. The stock that they have, if you look at the market capitalization compared to their actual operations, there's kind of like a meme premium to it in a way. So it's really not, in some sense, that different than other things, but it does open things like campaign finance law questions. That if you have a meme coin unlocking during your administration and you're selling it, that opens kind of all sorts of campaign finance and other issues. So we'll see how the different groups coordinate that. I think, he's more of a crypto aligned president, which includes Bitcoin. I think I wouldn't characterize him as a Bitcoin president. I mean, he did NFTs, they did DeFi. Now we got the meme coin on Solana. I think a lot of it is transactional. I don't think that surprises that many people about his history. I think it'll see what happens with the SBR. I think, for example, his incoming Treasury Secretary pick was at their crypto ball, so that's relevant. The fact that there's multiple pro-Bitcoin people in his administration is interesting. There's probably competing voices. He's a big proponent of Dogecoin in his inner circle as well. So we'll see how that shakes out. But I think the main takeaway is probably on the crypto side, you'll see more lax regulation. So the prior administration was characterized by a pretty aggressive SEC that tried to block things like spot Bitcoin ETFs, and was very kind of haphazard in terms of the things they went after, and even lost a lot of court cases. It was just not in my view, a very, and they wouldn't issue guidance on how to do things. If someone said, okay, we want to do real world assets or whatever kind of, crypto thing you're talking about, they say, okay, if these are securities, is there something we can do to make these legal? And they kind of didn't really provide that. So I think the pendulum's probably shifting the other direction, which is unclear enforcement, as of yet unclear guidelines, and then the president himself has his own meme coins and their own kind of crypto securities. So probably a more lax and laissez-faire approach.
Forecasts indicate that Bitcoin may be preparing for a big spike, reaching $122,000 by February before going into a consolidation phase. Following a jump from $98,937 to over $17,000 on January 21st, Marcus Thalen, head of research at Tanks Research, emphasizes Bitcoin's recent breakout from a wedge pattern and labels it a low-risk, high-reward entry opportunity. Analysts feel that Bitcoin's remarkable growth, which has seen it trade above $15,000, could drive Bitcoin to new heights in weeks. D observes that the price of Bitcoin has continuously fluctuated between $166,000 and $118,000 since the U.S. approved the spot Bitcoin ETF. If this trend continues, the next target of $122,000 appears to be easily within reach. The rally may continue past this milestone, even driving Bitcoin much higher, before retesting important support levels that underpin this outlook. On the weekly chart, Keith Allen of Material Indicators indicates a bullish cup and handle formation that suggests the upward trend will continue. The trend with technical signs supporting further development. Bitcoin's recovery of important moving averages indicates durability and puts the cryptocurrency closer to its all-time highs. For traders and investors alike, Bitcoin's rise to $122,000 is not just a possibility, but also a crucial moment. Whether this trajectory continues or consolidation settles in the upcoming weeks promises to be crucial for the market.
Sure, and this is kind of quietly one of the more important macro things to watch, and the reason for that, and I'll get to your question in a second. The reason this is relevant and not just like a wonky detail is that the debt ceiling can affect liquidity, and as I covered in a report with Sam Callahan and other work, Bitcoin price actions historically pretty correlated with liquidity. It's not the only correlation, but it's one of the more sizable inputs to Bitcoin price in the intermediate term. And so the debt ceiling, basically ever since roughly World War I, instead of Congress micromanaging every Treasury issuance, they say, look, the Treasury Department can do those details, but you can't go over this limit. And that's different from authorizing spending. This is basically just how they pay for spending that they do authorize with their other bills. It's kind of like whether or not the government's going to pay their previously agreed to bills or not. Mm-hmm. And for roughly a century, it wasn't really used by one party against another. But ever since the global financial crisis, it's a tool. Now we're in this age of more political polarization. It's a tool that can be used largely from the out of power party against the in power party, or at least whoever is president at the time. It can be used against them to extract some degree of negotiation. And if it's not lifted, you get technically the risk of a technical default. In practice, usually at the 11th hour, it's fixed. And we have a fairly small sample size because it's only been used since the global financial crisis. Usually it's used against Republican Congress, against a Democratic president. But that's partially because most of the years after the global financial crisis have been run by a Democratic president. Democrats didn't really use it against Trump in his first term. And we've not really seen like intra-party usage. This, if it's used here, and so far it is a little bit, if it's used here, it would be the first time, at least in modern history, where the Republican Party is using it against a Republican president. And so if they do enforce it and they try to extract concessions, then essentially the Treasury cannot issue net new debt. They can't increase the total debt load. To the extent that some are due, so they pay out, to existing maturing debt, and they can issue some new debt to kind of offset that, but they can't increase the total amount. And so they have to start taking what they call extraordinary measures. And that's the date that matters for January 21st, because the outgoing Treasury Secretary Yellen and her team estimated that the 21st is when they basically run into the actual debt ceiling and have to start shuffling their books around to keep things operating without issuing new debt. And the part that's relevant is that if this starts going on for weeks and months, they have to start draining their cash balance back into the financial system. So at any given time, the Treasury has a Treasury General account. It's their big checking account at the Fed. There's something like $650 billion in it right now. And if they can't issue debt, but they still have bills to pay, they can start draining their cash balance. And that's how they can keep running things for several more months. The last time this happened was the first half of 2023. And that, ironically, when the TGA is drained, it's actually pretty good for liquidity because all that money is draining back into the financial system. Excess.
Is that almost like QE?
It's kind of like QE, yes. And so they can offset quantitative tightening with that unintentionally. And any excess liquidity from that will probably spill into the reverse repo facility. But yeah, that's basically all pro liquidity. And so that actually can be decent for asset prices. The risk comes First they have to get past the debt ceiling impasse, but then when they actually go to refill the cash balance is when they could run into liquidity problems. So my base case is that this won't be a protracted one because we've never really seen an intra-party dispute get really protracted like this. But it's not out of the realm of possibility. Trump wanted the debt ceiling resolved before he took office. That didn't happen. And so now he has to solve it in office, but he has the benefit of his own party well, so the initial point, and it's kind of different than how other countries run things. The initial point was to not have to micromanage treasury issuance. So it's a law that made sense a century ago. So before World War I, the U.S. government was simple enough that literally Congress could kind of micromanage treasury issuance. That eventually got too big, too bureaucratic, too much going on, so they can't micromanage it. They say, okay, Treasury Department, do it. Just don't go over this number. And that's how we've been operating for like a century now. And it doesn't really make sense because it's not about allowing more spending. It's about whether or not you're going to pay the bills that you are already authorized. So Congress, which authorized prior spending, is now authorizing a debt ceiling increase to finance the spending that they've already authorized. That's the part that doesn't really make sense. And that's just basically an historical artifact that just is kind of the way things work. And yeah, it's mostly theater. And technically, if you had a really entrenched argument, you could run that into a technical default. And so it does put some pressure on the president to do things. But like I said, intra-party probably means less pressure, but we'll see.
So do you think they're going to have to dip into the Treasury General account in the sort of short term?
If weeks start going by, yes. There's actually already been a slight dip into it. So their current target is to have 700 to 850 billion in their account, and they dipped under 700 billion. Now at year end, at the end of every quarter, and especially at the end of the year, there tends to be liquidity strain in the system, like literally the last couple of days of a quarter. It's possible that they dipped it a little bit to kind of boost liquidity for that few day period. I'm not otherwise sure why they dipped below their 700 billion figure. So they're already a little bit dipped. But yeah, basically every week that starts going by, generally that has to start being drained. Now, any given kind of multi-week period, so if you have 2 to 3 weeks, bills go out regularly, debt matures irregularly. So not every week is going to be signal, but as you get into February, March, April, May, if there's no debt ceiling resolution, then we should start to see that cash balance drain.
This episode is brought to you by River. There are many places to buy Bitcoin, but there's no exchange like River. They have innovative products, phone support, and a dedication to security that you just don't get elsewhere. With River, buying Bitcoin is easy. You can set up 0-fee recurring buys to automatically stack sats, and River also lets you earn daily Bitcoin interest on your cash balance that outperforms most high-yield savings accounts. With River